Good morning, ladies and gentlemen. We hope you had a great time last night and you are ready to continue the second day of the very first Finance Magnates Pacific Summit 2024. And now, for the first panel of the day, I would like to welcome on stage David Nichols, co-founder and chief risk officer at Stables. David, the stage is yours.
Thank you, everyone. So it's been obviously a fantastic couple of days. Some great exhibitions and whatnot, but we're going to get stuck into the session. We've got a half-hour session. I've got Laura and Muneeb with me on the stage. We might just let them do quick little intros, and then I'll take over and moderate the session. So Laura, over to you.
Hi everybody, I'm Laura Dinneen. I'm head of product marketing at Zodia Custody. Zodia Custody is a institutional digital asset custodian. The clue is in the name. I have a background actually from Tradfi, so I came to Zodia almost a year-ish ago from NAB and Westpac. So I am a bit of a recovering banker, but I always kind of worked on the edge when I was in banking. So I was always the naughty one trying to do different things, always the naughty one, getting called into the headmaster's office for trying to change banking.
So was I. It's okay.
That do for now?
That'll do, yeah. Muneeb.
Hi everyone, I'm Muneeb Khan. I'm the head of Asia OTC trading at Kraken, and similar to Laura, I also come from Tradfi. My experience was mostly in FX before moving into crypto about 6 years ago.
Awesome, thank you. So I'm David Nichols. I'm one of the founders of Stables Money. For the first time ever, and I've been fortunate to speak on global stages around the world, I've got my amazing dad here in Sydney. So Dad, put your hand up. Dad's not from a crypto background, he's not from a digital asset background, so in the interest of Dad and all the people that are live streaming and the various others, we're going to use some pretty simple language and just sort of break down some hugely complex concepts to kind of tell you what it's all about. So by way of a little background to me, I'm also a bit of an angry banker, so call it 20 years in more traditional financial services across risk, compliance, governance, legal, product structuring. I got into this digital asset crypto space purely by accident. I was playing golf with some guys who were talking about this concept of Bitcoin. I'm like, wow, I just don't want to miss out. So I was one of those early adopters purely from an investing perspective and whatnot, and always thought that the user experience around crypto and digital assets was pretty average, was a little bit scary, didn't really know what was happening. So part of what we're doing at Stables is kind of just bringing real-world asset utilities. So people that have generally got a fairly substantial balance can spend it through a MasterCard relationship or send it. So think kind of traditional remittance flows. I'll leave it there for now, and I'll say a little bit more about what we're doing, and obviously if you're interested, download the app, Stables Money. But I'll throw it over. So our first question is, so how do liquidity, hedging, and credit work in a crypto environment? So Muneeb, I think we'll throw to you first, and let's open up the conversation.
Sure. So due to a decentralized market, liquidity can be quite fragmented in the crypto space. So typically, you can source liquidity via an order book or an OTC exchange, which represents challenges and opportunities when it's fragmented when you're sourcing it. So depending on what sort of currency you're looking to source liquidity, and if it's anything other than these days the majors and stables, if you're looking for, let's say, native AUD liquidity, that can represent a bit of a challenge. So that's where somebody like an OTC desk can sort of help you source liquidity in a more optimal manner. I guess in terms of hedging, the second part of the question, it's more challenging the further out you go on the risk spectrum in terms of the tokens that you're looking to hedge. So again, when it comes to the majors like BTC, ETH, Solana, it's relatively straightforward to sort of hedge those exposures. But as soon as you start looking for liquidity in a meme coin or something like that and go further out on the risk spectrum, it can be more difficult. the options are essentially the same. You can sort of go to an order book, you can go to an OTC desk, or you can go to maybe even a DeFi protocol, right? I won't go too deep into that, so we'll sort of keep it, I guess, at the centralized level for now.
Amazing, thank you. Laura, anything to add?
Well, Muneeb's got a really, really expert perspective from a liquidity provider's standpoint. Probably my standpoint is quite different because we don't provide liquidity, we're a custodian. But what's really important for our clients is the ability to access liquidity very, very quickly. So big difference between Tradfi and crypto is speed. And so our institutional clients need to know that their assets are safe, secure, sturdy, and the kind of perception that might come with that is slow and clunky. So we have to change that to make sure that you can get both. You can get safe, secure, sturdy alongside super fast and speedy so that our clients are able to access liquidity from their sturdy custody as quickly as possible.
Cool, so nice little segue. So what Stables does, we're almost a bit of a hybrid between traditional finance and sort of think banks and sort of credit providers and whatnot, with this wonderful ever-evolving world of cryptocurrency, of technology and of digital assets. So we're kind of the in-between, what we call the hybrid, the gateway between traditional finance and crypto, and we do it in a way that's super compliant. We quite deliberately will be doing things like KYC, we'll be doing transaction monitoring, so a real gateway between almost the old world and the new world, and I think we're just getting started. So from a sales perspective, so we've obviously launched in Australia, we're gradually rolling out throughout the world. So we've also got operations in Europe, in Asia. I'm on a plane to Abu Dhabi on Sunday afternoon, so we'll be looking to get regulatory licenses and approval and product offering over in the amazing UAE as well. So we'll keep rolling on. So the next question we're tackling is, so how do regulators view crypto's foray into mainstream finance? Laura, why don't you kick it off and we'll throw it to Muneeb.
So I have been coming to events that are specific to digital asset and crypto in Australia for the last year. I've only been fully into digital asset space for a year. And the topic on everybody's lips at all of the events is regulation. And we're at quite a critical juncture in Australia right now, where we know that regulation is coming. To a large degree, there is already some regulation that applies to crypto businesses, of course. But when it comes to really specific crypto and digital asset regulation in Australia, we know it's coming, it's looming, and actually we want it. We want really clear guidelines. And actually I'm quite pleased to see that at most of these engagements, there is good representation from not just the regulators, because actually right now they haven't got a lot to regulate when it comes to us, but from the people that are writing the policy themselves, so the lawmakers, Treasury. They turn up and they're open. They're willing to find out more about the weird little nuances and use cases that they need to know about in order to build robust regulation. So I've been pleasantly surprised to see the positive engagement from the Australian regulators and policymakers. On the other hand, though, I will say that there is now also a growing impatience a little bit. We want clarity. We want it as soon as possible. I am a little bit worried that the longer we wait for that clarity to come, the more other jurisdictions will leapfrog, the more we might start to see amazing Australian homegrown businesses look outside of Australia for that clarity. You're off to Abu Dhabi next week.
Indeed.
They have some clarity there when it comes to regulation.
They do.
Your business is not alone. So I would hate for our strong, innovative, exciting Aussie homegrown businesses to get impatient and also be wary about the risk of not having that regulatory clarity and start to look elsewhere. So I'm pleasantly humbled by the engagement I've seen, but there is a point where it needs to happen.
For sure. Excellent. Thank you, Laura. And Muneeb, obviously, sort of Kraken's been in the news a little bit from a regulatory perspective. Any thoughts you'd like to share on that one?
I'll tackle this from a different perspective. I mean, I echo what Laura said, but what I've seen from a pragmatic point of view is with the the ETFs hitting the market, that was a particular milestone for the crypto industry, and there's been increased awareness and scrutiny from the regulators within the space after those products came to market. And as a liquidity provider, we've had to build a lot of the tools and processes to deal with those products, on the fly. So we've been looking at some models in the Tradfi world and sort of, bringing those processes over to the exchange in order to, increase adoption, keep the regulators happy, and generally grow the industry. So from that perspective, I think the ETFs have been, a great sort of achievement, and due to the products coming to the market, the industry will grow from it.
Yeah, for sure. No, I guess from our perspective, so we almost decided very early on in the piece, and we've been in operation for the last 3.5 years, to lean into the regulatory side, to almost say, look, whenever we're interacting with people's money, it's kind of units of trust, call me the old banker in the room, but it probably should be regulated in some form or another. And then it's just a case of looking at the different licensing regimes around the world. So within Australia, look, I mean, largely, I think we're almost there. If you're dealing with any sort of financial product, you're likely going to have to get an AFSL or some sort of arrangement in place, lean into it, get an AML program going, policies, procedures and whatnot, around the world. So I've never seen so much regulatory change and consultation going on in this space. Obviously the UAE's set a beautifully clear path for regulatory compliance. We've got an entity and a license in Europe as well, so if you're interested in MICA and whatnot, Asia's also either consulting or setting a pretty clear path. So I think once in this space, and it's a coming of age, welcome to maturity, especially if you're dealing with people's money and whatnot. There's an expectation from customers, from investors, from regulators that in some way you're regulated. Where that falls in, obviously you've got to seek your own external legal advice and fit into whatever jurisdictions you're operating in. But for me, I think it's just a necessary kind of evolution. There's different forms, there's different things of how that looks like, but regulation's going nowhere but getting more and more.
Yeah, it's not law yet, but we've got a pretty good sense of what's coming. It's not being written in a black box. It's fairly open. The consultation papers are out. So we've got a sense of what's coming, and a lot of the lawyers will probably say that it's good practice to just act as if you're already operating under that legislation, act as if you are regulated already, which is nice. But until it's set in stone, there is not really that trigger that's really, really catapulting a lot of clients that we want to speak to, that we want to do business into that regulated space.
Yeah, for sure. Okay, so let's change gears. So how do retail and institutional brokers operate to offer various crypto assets? So Muneeb, why don't you kick it off in terms of this space?
Sure. So the primary difference, I think, is just in the product offering. So you've got many brokers who are sort of running an instant buy platform, very much geared to the sort of consumers, where they might come in and it's just ease of use. They can buy from a drop-down list of assets, and that's a fairly limited sort of service, and it's good for a beginner. I think once you get into the institutional space, there's a lot of products you can pick and choose from. So you've got staking, you've got OTC, you've got prime brokerage services, you've got API connectivity. So I think that's the main difference, and both retail brokers and institutional brokers have a role to play. The retail brokers are great for sort of getting someone into the industry, getting them familiar with, the types of offerings, and then usually you see an evolution. So, I mean, even within Kraken, we sort of cater to both. So we've got more of a consumer platform, which a lot of people sort of start off with. They'll find their feet, they'll get comfortable, and they'll sort of migrate over to the pro platform, which has a lot more bells and whistles. There's a lot more products that are offered through it, and then everybody from there sort of takes their own journey in terms of where they want to go. So I think both sets of brokers have a role to play.
Thank you. Laura?
Well, we're institutional only, and we're also owned by institutions. So Zodia Custody is owned by Standard Chartered and also National Australia Bank as of this year. So it's really important for our institutional clients. First of all, we are not a quick purchase decision. We're not pop into Priceline and buy a lipstick kind of a product. We are definitely a very, very long lead time, big purchase process kind of product. So there are a lot of checks and balances. There's a lot of due diligence that our clients want from us and also need from us, and that we're kind of built up to provide. A lot of our processes are at the level of Standard Chartered. We talk about being bank grade. So we have to be. Our clients are institutions, our parents are institutions, so we have to be that. That's one thing that our clients really look for. They also really need to see from us in terms of being able to access other services beyond custody. They also need to see a really strong and secure partner network. So we would work with brokers, we would work with OTC desks, exchanges, we do work with trading venues globally, and it's really important for us that we're able to build really strong, secure interconnectivity between us, our wallets, and other digital asset services.
Amazing, thank you. So from a stables perspective, so we're almost, call it stablecoin specialists around the world. We have both business and retail customers. So retail kind of think, your mums and dads, hello dad yet again, but those that are kind of using the service for buying lunch or for transferring money or value to someone else. Our business offering, our OTC Insta is really growing. So we've got companies in both Australia and around the world that are potentially putting their payroll through stablecoins. So as you can imagine, a Web3 company that's maybe got 20 to 50 employees, their payroll kind of goes in to this stablecoin ecosystem. Then obviously within that interaction, the businesses may have to pay vendor payments or licensing fee or custodial and whatnot, might have to pay their external lawyers and whatnot. So we're seeing a really large flow of funds on the business side, and obviously it's quite a profitable area of the business if you can kind of almost, like imagine running a business without a bank account, and that's kind of becoming a bit of a reality that you've kind of got providers like us that are almost connecting those dots so that it works on both a retail and a wholesale perspective.
You'll be banking all the crypto businesses.
We'll be selectively banking all the crypto businesses who pass our stringent risk and compliance program. Okay, so we've got 10 minutes left. Conscious we're going to have 5 minutes for questions. Our last question for our amazing panel is almost, what do we see is almost Australia's role in this emerging and evolving crypto space? Obviously, we've touched on a few of the regulatory elements and whatnot. I know that all three of us have got some travel coming up very soon, so that's probably a bit of an interesting segue into what we think almost the role of Australia in crypto is and where we would love it to go. Laura, over to you.
So I am actually a bit of a behavioral science psychology nerd, and I love studying behavior change and what makes people do things they do. So when it comes to adoption, behavior change is absolutely critical. If we want mainstream adoption, people need to change behavior. So my approach to this question actually uses a framework from the Behavioral Insights team, who have a framework called EAST, which is basically the 4 ingredients you need for behavior change. So it stands for E is easy, A, attractive, S, social, and T, timely. So on the easy front, you've touched on this. For a very long time, crypto has not been easy. There has been a massive UX gap. There's a language barrier, like you have to know certain words, you have to be able to speak crypto in order to get crypto. Duolingo needs to come out with a new module for learning how to speak crypto. Like, it's hard, it's not accessible, it's getting better. Education is getting better, and I don't mean school education, I just mean test, learn, do it for yourself. But there's still a massive, massive gap. And I would say businesses like Kraken, like Stables, have done a lot to move the needs along the UX front. So I think we're getting there with easy, but there's still so much in the way from actually getting mainstream adoption. When it comes to attractive, I mean, if it's financially attractive, then it will be more attractive for people. So depending on the market, that kind of spins that needle. Then you've got social, and that doesn't necessarily mean posting on Instagram when you buy a meme coin, although it could. Like, meme coins are inherently social. They have a little bit of a role to play in behavior change. But also I think a lot of it comes down to being able to see people like you are doing it too. And I think also for a long time there's been a perception that people that do crypto are a certain type, a certain like wanky crypto bro type. Sorry YouTube. And I think slowly, but not quickly enough, that perception's starting to change. I think the more that people can see people like themselves engaging, the better. And then finally, T, timely. I think regulation will have a lot to play there. So as soon as very clear regulation comes into play in Australia, that's when we'll also start to see adoption, not just from retail, people like me and you, but from the institutions, and that's going to switch massively. Once we start to see big super investing in digital assets, that's when things are going to change massively for Australia.
Awesome. Muneeb, what do you think Australia's role is?
Look, I think on the issue of adoption, there's certain segments of the market that have done really well. So you would probably understand this. The remittance sector was one of the leaders to sort of adopt crypto just because of the working capital benefits in terms of transferring value on a blockchain. So, I mean, I recall seeing a Finder study not too long ago that said at the peak, 30% of Australians actually had held crypto at some point in time. I think more recently that figure is around 13%. I mean, some internal studies that we've done at Kraken as well reveal that the penetration of crypto within the Aussie market is actually quite high on a global level. So I think for us it was around like the 4th or 5th market in terms of percentages. So I think we've done quite well in certain areas, and I echo a lot of what you said about, you know, the Web3 user experience. That needs to improve, so it's a lot easier for the everyday person to get access to crypto. But again, I think there's a lot of innovative companies here, and they're moving in the right direction to make that a reality.
Yeah, for sure. So we've got 5 minutes left, so I'll give a quick answer, but if you do have a question, please put your hand up and we'll get a mic to you. So for me, I'm a proud Aussie, live in the beautiful Northern Beaches. I'm a business owner, not just a founder. We love Australia and we think the adoption is getting stronger and stronger. And I think it's a little bit of almost up for the companies like us to almost have that real world adoption, an actual reason to use it. And it's one of those that once our companies using it in an efficient way for a flow of funds, they're getting a cost saving, they're getting a timeliness, then others will start using it. Obviously the adoption curve, as we've almost discussed from a psychological perspective, takes some elements of trust. And I guess we as an industry have got to build those elements of trust. But this thing is not going away. The banks are doing it. Government's talking about it. It's just kind of what bits of the puzzle we all look to explore. Any questions? We have 4 minutes left. I'm keen to throw it over in your very safe and capable hands. Be brave. Any questions? Okay, no questions. I want to ask a random one then. So obviously we've kind of talked about Australian adoption. What do we see happening around the world that's exciting and that potentially Australia could almost follow? Laura, what are you seeing?
So we recently launched in Singapore, Hong Kong, and we have a JV in Japan. And it's really interesting to see how, so like crypto is global, blockchain is global, but the crypto regulation and jurisdictions are not global. And also each market has different needs and different things driving. So for example, Singapore, Hong Kong, we're seeing a huge demand from high net worth individuals and family offices over there. And I think one of the things that's opened the door is having some very clear guidelines around what you can and can't do. And I would say that they're definitely mature when it comes to regulation. They're not particularly loosey-goosey. They're actually really strict. They actually they have some pretty high bars, but that's not stopped institutions from getting involved. That's not stopped demand in those regions. And I think that's been interesting to see. So having a very high bar when it comes to what you can and can't do can also actually sometimes open a lot of doors.
Yeah, for sure. Muneeb, so Kraken's obviously doing lots of very exciting things around the world. What could we look forward to in the future?
So we're solidifying our presence in key markets, but we do have an eye on some of the jurisdictions that we've sort of discussed, as potential geographies for expansion going forward. And I think when we do sort of look at that, the key aspect is always that clarity in terms of regulation. Obviously, you want to go to a market that's got very clear regulations. The banking sector is going to support the industry as well. So that's what's on the horizon for us in 2025.
Yeah, interesting. And from a stables perspective, so what we're seeing around the world is that the adoption curve is well and truly at a point where there's strong growth and maturity. We're obviously looking to expand into as many markets as we can. We're like any payments company. The more people that are using our cards through our relationship with MasterCard and others, the more people that are sending a balance. We basically, similar to most payments companies, we make money when we move money. We love giving a good user experience as well. So when I opened this session, I said that even though I was an early Bitcoin adopter, I kind of fell in the space from an investing perspective. The UX and the accessibility has now become just a hygiene factor. So in the same way that we're interacting with hundreds of apps at any given time, that's now just an expectation, and it's almost one of those, if the app or the experience from a customer isn't pleasing, is clunky, people will go elsewhere, and it's almost a race to kind of have both the security elements, all the things like cybersecurity that are just like banking. When you go through a banking app, you don't even think about that anymore. You just assume it's all there. Crypto and digital assets, this is kind of where we're at. Love Australia. Australia's probably 2 years behind the curve a little bit. We look what's sort of happening in Europe, UK, US, Asia. But I think Australia will catch up, and there's some really, really exciting companies that are sort of basing from Australia and doing some things. So I think watch this space, get curious, ask some questions, but I think it's a space that's certainly not going away and only getting bigger and bigger. So that we're right on time and conscious of keeping the time going. So I'd just like everyone to thank our panel, and if you have any questions, we'll be floating around. Please feel free to ask. So thank you for listening.